We are live here to give our 2026 outlook, all about what's hot in 2026. We want to make sure that you have the most insight to take the most advantage of what we believe to be the best opportunity out there. And that is helping small, medium-sized businesses get access to financing and really helping them in terms of being a consultant and letting them know what's available. Some things that we're going to go over today and some questions I'm hoping that you'll get answers to are, what are the most common products, or what are the products that businesses are going to take the most advantage of when it comes to funding in 2026? We've seen the rise of specialty finance products, things that are going to leverage particular asset classes within a business, things that are going to allow business owners to take advantage of their opportunity because that opportunity is unique to them, their industry, the region that they service. A lot of this increased information allows for better decision making on behalf of the banks and lenders that are out there. So they're getting a little bit more flexible, taking on a little bit more risk because they feel comfortable with specific industries or in specific regions. Well, this is all at your fingertips through working with Rock Financial. And that's the most important message of today, is that you guys really understand what you have access to is the best products and services that are available, right? As far as the hottest products that are hot right now, this is going into 2026 and at the top of what businesses on their way in the door are asking for, right? They're asking for equipment finance because the Section 179 of the tax code was made permanent this year, meaning that you can take advantage of the ability to write off your equipment purchases in the same year. This completely changes how businesses can leverage their equipment and their equipment upgrades in order to offset potential earnings that they might have to report and be able to take advantage of spending money in their business rather than spending money on taxes for the money that they make, right? So there's a lot of opportunity inside of equipment. SBA has just opened back up, so that is on fire. Obviously, there's a list of people that were waiting to be processed. Imagine being one of those people who you were basically at the closing table a couple months ago, and then the government shut down for 40 plus days, right? You had to wait for your money. Meanwhile, you had jumped through all these hoops. Well, they are back open, they are taking applications, and we're seeing a lot of increased SBA finance type of deals, meaning that there's multiple uses of funding and that they have the time to wait for a potential SBA solution. The next one is accounts receivable and factoring. If you're one of these B2B companies that are out there and you're generating receivables within your business, meaning that you've issued invoices to your customers and now you're waiting to be paid, if you have just, let's call it 5 to 10 large customers and you're consistently waiting to be paid from those customers, well, that can cause cash flow gaps in your business. What happens when you need additional inventory or materials to build your product or do your process for that business, right? We've seen a major increase in businesses that are not only utilizing this type of financing, but also adding it as a strategic insert into their capital stack. These are very flexible options that allow businesses to continue to grow and take advantage of growth opportunities. Term loans and lines of credit, they are at an all-time high for us. We have set a ton of records in 2025 in terms of how many deals we're doing, how large the transactions are, and realistically, pretty much every category that you could imagine around lending. We've kind of set a new bar for ourselves, but that's because of you guys utilizing us for these products. Businesses aren't just out there taking on these loans or lines or different types of financing for no reason. So what are the most common reasons that businesses are borrowing? Because that's how you can help those businesses. You find the ones that are completing mergers and acquisitions or partner buyouts, or they're passing ownership from one generation to the next. You know, one of the biggest things that we see simply is just cash flow gaps. It's not that businesses aren't making money. A lot of them are making a lot of money. The problem is you got to spend money to make money, right? So when they want to take on a new contract, or they want to add additional product lines, or potentially pivot into a new sector and offer more a different service, right? These are opportunities for these businesses, but they have to invest in those opportunities. They have to invest in inventory. They have to invest in employees and manpower. They have to invest in technology and equipment, right? So this is where the opportunity lies for you and I. This is where the opportunity lies for those that are working with small and medium-sized businesses, is if you're working with them in the marketing capacity, sales capacity, helping them with customer acquisition, or you know people who are. The reality is you can be utilizing Rock Financial and the products we have to service this need in a way that all of these businesses are actually already doing, right? The success only comes down to how you're utilizing us and what makes the most sense for you when tapping into the commercial finance industry. The reality is businesses are doing this every day, and they're doing it utilizing financing. You could be servicing that need, and this is exactly where we see the market headed. If you're looking to market this opportunity in 2026, the number one thing is overqualified is qualified. What do I mean by overqualified is qualified? Simply 3+ months in business, $10,000 per month in revenue into a business checking account. But I promise you this, the businesses that have been around 1 year plus get better rates and terms. The businesses that have been around 2+ years get better rates and terms, right? The ones that have been around 5+ years, they're getting the strongest rates and terms because they're less risky, right? And that's the way that it works, right? So if you are looking to leverage businesses that can get access to the top rates and terms out there, I want to teach you how to do that. And that's overqualified is qualified, right? We can work with no minimum credit score, but there's a big difference between somebody that has a 500 credit score and somebody that has an 800 credit score. I think we can agree on these things, but if you're going to be looking to target a specific audience, just remember overqualified is qualified. That's in anything that you're going to market, if I'm being honest. People will target a specific niche or industry or vertical. I believe in targeting that use of funds. Right? If you're targeting cash flow gaps for businesses, that's something that a lot of businesses are gonna come across. It's not just one industry or one niche that's coming across cash flow gaps or equipment purchases, right? If you target those use of funds, you'll have a much wider market, much wider target to appeal to, and it's going to be timing based, which you'll be there at the right time, right? And just remember that our top affiliates, they're leveraging multiple products, right? Multiple solutions. What do I mean by multiple products or multiple solutions? They're not just offering a line of credit. They're offering a line of credit. They're offering the term loan, the SBA. They're offering all of the funding that they possibly can to the businesses that they're working with. The reason that affiliates are partnering with Rock isn't going to change in 2026. I promise that. There's no cost business advisors to you and your business owner customers. You can access both secured and unsecured lending programs, meaning there's going to be collateral required for some programs, no collateral required for others. This is a big factor for businesses. A lot of them don't have the collateral, or if they do, it's already been pledged to their bank on their bank line of credit, or whatever product they might have through their bank, or they have an asset-based line or some form of asset-based lending that they have in place. So flexibility is going to be key going forward, and flexibility is key today.